Hello and welcome to the Investing Master Series. My name is James Boyd. Today's date, August 4th. Now, this is a live session, but it's also being recorded. So if you're watching on the recording, we welcome you. This is not a one-off. We meet each week on the topic of the Investing Master Series, where we talk about really stocks, fundamentals, technicals, options, all of it. Now, a part of the things we actually teach, our focus here today is going to be on momentum. And what an interesting topic to talk about on today. Now, if you haven't seen the charts, well, you'll be in for a surprise. If you've seen the charts, you're like, wow, talk about aligning the topic with the day. Now, just real quick, we'd like to welcome all of you here today. We got with us Clarity Tax, KS Sim T5 5K, and we also got Norel, Bill with us, Grace with us, Kevin with us, Dom with us, and many others. We also have in the chat Connie Hill. We welcome her as well. So let's go ahead and get started. Now, this session is 45 minutes long. You can also go back and just kind of note, I'll share with you some links with you in just a moment that you can bookmark. As we do this, want to quickly remind us that when we bring up stocks and when we bring up options, remember that options carry a high level risk and are not suitable for all investors. All options are not the same. Also understand the information here is provided for general informational purposes only. Schwab does not recommend the use of technical analysis as a sole means of research. And also when we do our examples, we will do those on the Paper Money software application for educational purposes. So there's a paper money version that you can practice stock trading, investing, and or using options. Be aware of that. Also, investing involves risk, including loss of principal. And when we go over examples, remember when we talk about, let's say, short options like cash secured puts, those can be assigned at any time up to expiration, regardless of the in-the-money amount. And when we talk about examples here today, we'll talk about market conditions first off, which I think we need to address. And then also we'll talk about looking at momentum. Now, when we talk about this, let me pull up this chart first off, okay? Now, this chart is the S&P 500. So if we were to say the market, okay, this is the chart we'd probably bring up. 10 sectors, 10 or 11 sectors, 11 if you include real estate. If you look at the S&P 500, we've been talking about the last couple days how the market, when you looked at the weekly chart, was really grinding to show like an ascending triangle pattern. Now, what you're going to notice is when we talk about momentum, what we are trying to get are these moves here. When there's the shorter term moving average is above the 20 period moving average. I'll zoom in just a moment. Now, all of these are not the same length or as far as time, they're not the same appreciation percentage either, okay? Sometimes these little moves can just be short term, but the investor, that's what they're trying to do. They're trying to get it to when you have that green shading. Now, I know what you're thinking. James, can I just get this one right here 10 times over and I'd be happy? Right? I mean, that's what everyone would say, right? Now, what you're going to notice that here we have it again. Okay, so when we talk about momentum, we're talking about the 10 period moving average that is greater than the 20. If that's actually the case, you're getting the green shading. Now, the moving averages we have on the chart are the whole moving averages, think weighted moving averages, and the duration of time we look at is 10 and 20. The 10 is really key on being able to spot momentum. We're looking for the stock price, okay, above the 10, okay? This right here is key, okay? If you're saying, look, I'm trying to put myself in a position where the wind could be at my back on my investment per se, the investor is actually probably trying to, on purpose, the stock P, the price, is greater than the 10-day moving average. That's the foundation for any trade that we actually talk about if we're talking about bullish. If we're talking about momentum and trend, that's where we want this right here. This chart I'll share with you just real quick. If you don't have that, let me give that to you. I'll just share with you, if you just said, I just want this chart, There we are right there. Okay. Now, when you zoom in, you're going to also notice that when we talk about the timing, right? The nice thing about the whole moving averages is it also helps us see the turn, right? These red lines are showing that sellers are in control. There's not bullish activity. Okay. Red, red, red. It started really on July 30th. And on July 30th, you saw the 10 period moving average, which is always going to be closer to the price, shorter duration. And if you look at this, then the 20 period moving average went green and there was a crossover. So there is a difference in sometimes the timing of when one moving averages turns color. That's okay. You want to see that. You like to have an earlier signal and a confirmation. The earlier signal for us, the 10 period moving average. The confirmation is really more the 20 period moving average going green or the crossover itself. So when we talk about momentum, that's really what we're looking at. Now, this chart, if we go back to just real quick, this one, I'll share these charts with you. This is what we really meant by looking at the weekly chart. This is now showing the weekly chart. And again, sometimes in the markets, in the shorter term, I'm just talking about 2-3 days to 2-3 weeks, you can get some consolidation behavior. We saw that, okay? We saw a couple days ago where the market dropped down below its trend line. And we talked about this yesterday, how sometimes you can get breakdowns in the shorter term only to snap back to the upside. And boy, have we seen that. Tell me you've seen that. Okay, now, I just need to see where you are, okay? How many of you are saying to yourself, James, I like today. I just really like the S&P hitting a brand new high. Now, if you said, James, could you share this link with me and how do I put this on? Let's just make sure we're all in the same place, okay? So I sent to you in the chat a link. That link, you can go right to the very top right-hand corner where it says setup, and you can now go to open shared item. Now, what I'm sharing to you is the charts that we use. This is like tools that we use to gauge trend and momentum. These are some of the charts that I have chosen over 30 plus years of doing this. Now, am I going to say they're the best? My views of them, I'm going to keep them to myself. Okay? They're just going to be some charts that I share with you. Now, I'm going to click on open shared item. When I click on open shared item, I'm going to copy and paste what is in the chat. Now, if you're watching this on recording, you can also go to the video description and you will see this link here. We love you too, so we don't want to leave you out if you're watching on recording. Now, once we do this, go preview and then import. All right, so let me show that just set up, open shared item. All right, so that's not too bad. Copy and paste in what you see in the chat or in the video description, preview, and then import. And what's going to happen is you get a small package of charts. You get the small package of charts. Once you pull this up, you're going to see it's right there. If we maximize this, how do we save this? Well, up at the very top right, you're going to see a couple squares. This just means we're on square one of the charts that we have. We click on it and we just go save grid as. We click on save grid as. I'm just going to label this as the package 26, since that's what we call it. And we call it the package because it's the package of charts. And click on save. Notice when we actually go back to that just real quick, you're going to see it's right there. How do you go forward and backwards? Click the forward, forward, forward. And in our trade examples, you're going to see why we have different charts for different reasons, okay? This is like a toolbox in your garage or your house. Now, first off, now the comment says, from Ecoscaper, do you treat moving averages differently around earnings? No? Okay. We would treat moving averages different around sideways consolidation. Because if you kind of have like some consolidation, the moving averages don't matter as much because they're called moving averages for a reason, right? Not channeling averages. We want moving stock prices, higher highs, higher lows, lower lows, lower lows. moving, not channeling averages. So wouldn't treat them differently around earnings, would actually treat them differently around the price just consolidating. All right, now, by the way, if we also look at the EW, the equal weight, we know that the S&P 500, the SPX, that's top heavy technology. We've hit that pretty hard, okay? The equal weight, and I call this the fair index. Fair index where all sectors represent the same, okay? Well, if we looked at this and said, well, is it just technology that's moving? The equal weight also hit a brand new high. We said someone might try to go bullish the S&P 500 equal weight if they just didn't want to have maybe more volatility in the potential return if it had a positive return, or just volatility in the holding itself. The other thing is they might just say, look, I don't think technology is going to outperform. Now, if someone thought technology was going to outperform, they would probably just buy a product that's actually trying to track the S&P 500. Now, if someone said, look, I actually think the technology is going to outperform, we know that the index that is actually 50% technology is the NDX. Now, yesterday we had an interesting discussion upon, when things pull back, we kind of mentally get down. And I know that because that's how I felt. Now, when I see things go down, I don't get down as much. Matter of fact, when it goes down more, it actually becomes more and more exciting, okay? Because the down doesn't typically last forever. And I'm talking about the index, okay? I'm not talking about a stock. Now, if you take a look at this, one of the comments we made yesterday, and tell me if you remember, we were saying, hey, be careful. We can get caught up in the recent pull down, and all of a sudden we start to see those moving average crosses. Price above the short-term moving average, the 10-period moving average that I'm pointing to. Also the shorter-term moving average, the 10 above the 20, like we're seeing now. Now, that's the setup. The other part where the other things that we've talked about is stocks that break above the old support, the new resistance. Now, some of you were not here yesterday in that discussion. I'll share with you that link from yesterday. But we on the NASDAQ had a couple lows, right? A couple lows in that same area called support. And all of a sudden, this should have been now resistance. What did we say yesterday? Well, all of a sudden, the price starts to go back up. And then people say, well, I'm not going to get back in because I got stopped out 1 or 2 weeks ago. What does that have to do with now? Nothing. The only one that remembers is you, right? So the question is, every time you take a trade, how many times can you take that signal without getting emotionally biased based upon what happened last time? That's very important, okay? Now, what you're now going to we talked about this yesterday, being a bullish engulfing candle right into resistance. We talked about be looking for, can the price break inside that old channel? Today, we saw a gap to the upside. And so far, we're closing. If we close here, we'd be closing higher. Now, if we talk about the NASDAQ, one of the ones that had a question on it, Scott brought it up, was actually looking at the semiconductors, okay? Now, we said semiconductors had not broken the resistance as of yesterday, but this is the lines that we drew from yesterday. What do you notice today? Now, how else can you get momentum? Well, you get momentum when you break resistance. You get momentum when you actually have maybe a crossover, right? Like we've been talking about, or just a bounce. Now, what you're going to now notice is we have a breakout. Now, I'll show this in 2 ways. We can draw a diagonal line or a horizontal line to see, did we break resistance? Fine. The moving averages we could also see that we've been talking about, sure. If we talk about a bullish bounce, that is what that green dot is. That's what we call close above the high of the low day, a bullish bounce setup. Now, if you said, James, I'm not very good at drawing lines, then if you went into about that second chart in, okay, you're now going to see that on the chart, there are lines that depict highs. The orange line is a 10-day high. The blue line is a 20-day high, 1 month of trading. 10 days would be 2 weeks of trading. And that gray line is 55 days, intermediate. Now, let me show you this on a different stock because we talked about this yesterday too. We'll just swing back and talk about it. One of the stocks we talked about was Google. Is anybody watching Google? Now, you're going to notice that if you said, James, I'm not very good at seeing breakouts. Well, if you're touching one of these lines or two of the lines or all the lines, that's giving you a really good idea that we're breaking out, okay? Now, if you look at this, what happened yesterday, we hit the orange line. What is the orange line? Well, it's the 10-day high. Well, today, what did we do? Well, it actually hit the blue line. What's the blue line? It's a 20-day high. So we're just looking at duration of time. If you actually hit the 10-day high and the 20-day high, there's just more confirmation. But what happens if, for example, you're something like the Dow Jones, where you're actually hitting all three lines? Well, here we have day traders, swing traders, intermediate long-term traders, maybe all piling in on that trend. Okay, now go back to Google for just a second. Who actually is really trading maybe that orange line? Maybe those the swing traders. If you actually get maybe the blue line, say swing to intermediate, usually those who are trying to invest intermediate, they might want more confirmation. Not always. They might dollar cost average all if it goes up. But some people that trade longer term, they want to actually see that gray line being hit. That's not our viewpoint. We like to try to actually show examples of dollar cost averaging on the dip in the price, but that's a difference. Now, let's take a look at this just real quick. So I just want to show you that. So if you said, James, I'm not very good at drawing lines, that's something you do want to get good at to see the momentum. But if you said, I need help, use that second chart in. Now, let's go to just real quick before we look at this trade example. Let's go back to, what about the Russell? James, you haven't said anything about the Russell. Now, the one thing that I'm going to say here is I teach an ETF class with Kevin on Friday. And the one thing I want you to kind of always remember is the investor always thinks that they have to invest in a stock. It's not true. They might consider buying a product that's tracking an index or trying to, or a sector or an industry group. Do not forget that. If someone says, look, I'm going to buy an individual stock, it might be more volatile, and they need to actually be right on the stock. Buying something that's tracking the index or trying to, they're buying the group, okay? Russell 2000, the small caps, also getting a push. If we drew the diagonal line, let's manually draw it, but also look at the lines we actually have, the breakout lines. If we kind of drew this and said, is the Russell 2000 breaking out? Are we starting to see signs of momentum? Sure, okay? Now, James, I can't draw a line as good as you have. You've drawn many lines, that's true. But we could also go back to this chart, the second chart in, and said, did we hit also the 10-day high here today? Yes. Did we hit the 20-day high here today? Yes. Are there signs of momentum? Yes. Now, James, this is all great, but you're now making me think that I have to pull up each stock individually. That's not true. Now, let me show you one thing before we look at our first trade example. On the Thinkorswim platform, okay, if we went to MarketWatch and we went to, let's say, quotes. Now, these are some of the column headings that we like, okay? Each column represents a way to gauge momentum, or I should say price performance, momentum, the trend type that we have, and I'll just verbally speak to this just real quick if you've never seen this. Percentage change, that's today, okay? If we actually said, and I'll bring up the Dow 30. Now, I'm just some of you are brand new here today, so I just want to kind of make sure you're aware of some of the suite of tools that we actually look at. These are the tools that we like to use, okay, in our classes, and I'll share with you those links in just a moment. Now, yours truly, Caterpillar, some people call it kitty cat, okay, at the top, If we're talking about the highest daily percentage, it's Caterpillar. Okay. If we talk now, by the way, is that a way to gauge momentum? That is, but just in a very short term sense. The week percentage, that is a way to gauge momentum. 5 trading days, and telling us which stocks have the highest percent. If you have the highest percent on a weekly basis, that is absolutely a gauge for a momentum. Okay. Now, if we said more of the 1 month, that's more of a gauge for more momentum to trend. Year-to-date percentage, now we're actually really talking about more trend. Now, you could say momentum too, but if we're talking about year-to-date and we're 7 months into it, to get a 58% return year-to-date, there's been some trend, obviously, and momentum. So that's why there's different columns, because you're looking at different durations of time. Momentum on the percentage change, absolutely on the weekly. But when you look at the 1 month, we're now starting to look at trend. And absolutely, when you start looking at year to date, you're absolutely saying which ones have been those stocks that have been trending. Now, if we take a look at this, okay, I want to kind of bring up an example of kind of what we've talked about so far. If you said, James, how would I be able to see stocks that are hitting those lines? The columns that have the 20DH, those stand for 20-day highs. Now, James, could you put in the 10 as well? You could. For our sake, we just have the 20. Anything that has a green background with a 1, that means double check it. Scripts are not guaranteed for accuracy or timing. Anything with a 1 and the green background means yes, verify on the chart that it's hitting the 20-day high line. Microsoft is, JP Morgan is, and so is Sherwin-Williams. You're also going to see that the other stock in the Dow Jones that's hitting the 55-day high is actually Microsoft, JPM, and actually Sherwin-Williams. Now, do they always hit the 20 and the 55-day high at the same time? Not always, okay? Now, what I want to do is you're going to notice that one of those stocks that we're seeing in there is JP Morgan. Let's look to do an example together of momentum. Now, if you don't mind, I'm going to let's kind of make a watch list together. And I have a couple stocks I like to look at, and I would like to look at some of the ones you want to look at. So let's click on the 3 lines, and I would like you to type in the chat box, which stocks would you like to look at? Now, I'm going to click on the 3 lines. I'm going to say create watch list. Now, if I create a watch list, I'm just going to say class web watch list, and I'm going to put the date, 8/4. Okay. Now, a couple stocks. Now, JP Morgan is one of them. I'm going to type in C for Citigroup, same area. I'm also going to put WFC, Wells Fargo, Morgan Stanley. Now, the one that has been whipsawed is Dell. Gary, don't laugh. Oh, just hit the 460. If you didn't see some of my posts this morning, you know I've kind of been talking about that. And I'm also going to put a little BAC. Now, are there any other ones that we could actually talk about? Now, the other one I want to kind of bring up just real quick will include Google, IBM, okay, Apple, and Intel. I'm just looking at the chat on my right-hand side of the screen. You already made mention of the Qs, or the NASDAQ. Okay, so we got Intel a couple times. SPCX, SpaceX, okay, and Kurt actually says IBM. Morgan Stanley we got. JPM, we'll include that. Okay, now, let's start with this for just a second. So now what it does is it takes the stocks that we inputted. What are we looking for? Now remember, if we're looking for momentum, the column heading that I'm looking for momentum is the week percent. Now remember, if something goes up 14% for the week, what is it going to look like on the price graph? Something that looks like it almost went straight up. Now, if I said, well, what about this one? That's down 10% for the week. That's Apple. Well, it would look like it just went down. Well, that's not bullish momentum. So we're looking at the ones that are probably halfway up in the list or higher. Now, if we said, James, I want to see stocks that are above both moving averages, well, there's two different ways we could see this. The trend column, we're looking for anything that is probably in, let's say, trend 3 and 4. Okay? Trend 3 is when the stock is above both moving averages and a green background. And trend 4 is the stock is above both moving averages, but it could be up near resistance. Resistance doesn't necessarily always mean bad, especially if they start to maybe, or they're starting to show signs of breaking out. How many stocks? Now, Dale, don't leave us in the dust. It's over here. I'm watching it. If you look at trend 3, and the reason why I did this is I got so sick and tired. When I would ask friends, hey, what do you think of the trend of this? Yeah, it looks really bullish, and if it does this, I'm going to get in. I'd go back to them and say, hey, you got into that trade, right? What trend? The one that you said you were going to get in. No, I'd pull up the chart and say, well, tell me what you think about the chart now. And their answer would always vary based upon the day. I hate that. So the trend column is really just looking at where the price is in relationship to the moving averages. That's a way that we could also gauge momentum and trend. But also we could actually say in this case, which stocks have moving averages that are green? Huh, everything but Apple. Now, the green in the boxes are telling us the color of the moving averages. The numbers in the boxes are telling us the number of days that the moving averages have been green. Okay, now I can't take it any longer. Let's go look at a trade example. The reason why I kind of took some time to do this is in one of the surveys that was recently sent out in the chat, there were some questions on could you go over that. That's why I wanted to do that as well. Now, what I'm going to do just real quick is I'm going to bring up WFC, okay? So we're going to go to the charts tab, and what we're now going to do is going to type in WFC. Now, WFC, here it is. Now, if we're talking about momentum, based upon what we talked about so far, we talked about the moving averages going green. Let me just kind of make sure we're crystal clear on this. This I'm going to label as 1. 1 representing that the 10-period moving average goes green. Some investors who like to get in early might get in some or all that day. Second, we actually have a moving average crossover, and on the that would be 2, and on the very same day, we actually had this 20-period moving average going green as well. That's not always going to be the case. Now, in this case, we call it a 1, 2, 3 method. 1, the earliest entry. 2 would actually be kind of more the mid-entry, and 3, let's say the 20-period moving average going green, okay? You're just saying, look, I want more confirmation. Now, if we said that, that also tells us that the moving averages, green, price above the moving averages. Now, on the chart, what we're also noticing is prices breaking resistance. Now, if I went to my neighbor's house, okay, and just said, hey, open up, Gary, I know you're there. And he says, look, I'm a cop. I don't know nothing about charts. Well, here's the deal. If I went and said, Gary, can you just tell me, is that stock hitting the 10-day high, which is the orange line? Is that stock hitting the blue line? We can say it's hitting the 10-day line. If someone's hitting if the stock is hitting the 10-day line, it's the first sign, or it's another sign, a way to gauge momentum, to say it is showing momentum. Now, why do we care so much? Well, because what we're trying to do is as I said at the very beginning of this class, we are trying to get these moves right here where we go, okay, where we get this green shading. And what happens when those stocks are in that condition? Sometimes all 3 here, it's just hitting the high, hitting the high, hitting the high, hitting the high, hitting the high. Oh, give me more. Isn't that what the investor's saying? Just give me more. Now, here's what we're going to do. We're going to take this trade. We're going to actually go to the trade tab. And what we're going to do in this case, and by the way, let's just do this for simplicity. Let's right-click on the chart. Now, when I right-click on the chart, I'm right-clicking about where the price is. we're going to go buy custom with OCO bracket. What is OCO bracket? Well, it's going to give us the entry price, the target, and a stop. Now, the one thing we have not made mention of is look at how many of these stocks, talked about this yesterday, are breaching inside what should have been resistance, but now it's not. And now when we actually go back to this, the investor might say, well, geez, James, if we break resistance, well, the likelihood is that we might try to go up to the next level of resistance. Where is that? It's right around $96. Now, if I put that there, I'm going to say limit. We're saying but think about this. If you're a seller of anything, you're saying I want to sell if we go to this price or higher. Now, that sale, we might say is good for today, but I also want it to be good in the future. So we're going to do GTC for good till canceled. Now, the stop. That stop, if we go back and zoom in on this, we're going to say, look, where do we see a recent support? Well, that recent support, think floor. One of those areas was right around 85, okay, 68 or so, which I was pointing to. Let's just say 85.50, 80. Let me point to it again. Let me just make sure you see where I'm pointing to over to the right-hand side? It's about 85.60, okay? If I take 85.60 less 2%, so I'm taking 85.60 as the floor support times 0.98, which is just 2% less than the support. And if we did that, it's going to be 83.88. So what is this saying? We're saying exit, sell if we go at or below 83.88. Okay? Now, can anyone tell me what is the financial sector doing today? Can anyone actually tell me that in the chat? Can you tell me that in chat? What is the financial sector? Okay, now, one of the questions was, how do I maximize my profits? Now, I'm going to tell you, one of the ways that sometimes what can happen is when you actually have some of these trends that are trending, what happens is when you're always thinking about, I want to maximize my profits, maximize my profits, maximize my profits, I want you to go back and look at some of the stocks that you recently got into, Rebecca. I want you to look at where you got in. And I want you to look at where you got out. And I want you to look at these moving averages and say, did you get out when the shading was still showing you green? If we were forecasting what actually happened, you are probably like most investors where they actually see one red candle and what happens? You sell, only to see the trend go up again, and you actually get in, and then you see one red candle, and then you sell. And what happens is you're never really maximizing your profits. You're always getting flinched out or scared out of trends. How do I know that? Because that's what I did, okay? Because I would see red candle, and I would say, oh no, I want to get my $87 profit. Look, we're not trying to get $87, we're trying to get $800, $8,000, okay? You can't get big trends if you don't typically hold them over higher highs and higher lows and let the trend, okay? It's just kind of funny that we do that. And it's human nature, right? We always want to just grab it. But the thing is to really let it have big trends, big potential unrealized profits, gotta let the trend. Now, here's the deal. If we take a look at this, I'm just going to kind of set this up. Target at 96, 83.88. I need to change that day to GTC. This stop is saying if we get to that price or less, sell the shares. Now, one of the questions I asked was, what is the financial sector doing here today? If we're trying to do top-down analysis, hey, I'm trying to buy a stock where the sector is increasing, etc., that financial sector is increasing. This is the same idea as real estate. You're saying, look, I need to buy a house, okay? I want to buy a house in a neighborhood that's increasing in value. And we're asking ourselves, could that trend continue? Now, so trade example number one was Wells Fargo. Now, if you said, James, we're talking about building momentum here today, could you just kind of recapture super quick What are some of those tools to see trend? The whole moving averages, okay? Visually, the green shading. Second, another way to actually see those the momentum is using the day's highs on the chart, which is that second graph. Another way you could actually see that on the market watch, if you go to my X page, I'll share that link in just a second, putting in this 1 month high, excuse me, the week high, week percent, excuse me, the 1 month, absolutely. If you said I'm trying to track momentum, it's going to be hard to see momentum in a list format if you do not have the week percent and the month percent. You need those. Now, if you said what else, you need that trend column, because if you said I'm looking for bullish trends, you're looking for stocks that are in that trend 2 minimum, most likely 3, maybe 4. Trend 3, again, is just saying that the stock is above both moving averages. This is not based upon someone's perception. It's based upon, and you can right-click on that column heading, go to Customize, and if you do, you'll see a reading on that of what do the numbers represent, okay? Now, let me share with you this link, because now I just feel like some of you are like, hey, yeah, I really like to know more about that. Share with me. Well, let me share it with you, okay? Feel horrible to just lead the witness like that. So these classes that we do, they're on YouTube, okay? You do not have to be sitting at your computer. You could be on top of, maybe, let's say you can be in the Swiss Alps, and you could just say, look, I got my phone and my iPad, and you could watch these classes on YouTube. Our channel on YouTube is Trader Talk Schwab Coaching Webcast. So if I went to that search bar right there, that search right there, just start typing in Trader Talk Schwab Coaching Webcast, press enter, it's going to get you this page. If you have not subscribed, which you can do so for free, you subscribe to the channel, and that way you can see all of our videos that are right on our page. Okay, now, the other thing that I want to make sure that you're aware of is some of the things I've been talking about with these tools. This page is my X page, okay? And the reason why I'm bringing this up is I share with you these tools that we've created over years. I was going to say I would die. I don't want to die, okay? I would really want these tools. If you said, I'm brand new, I wish that I would have literally started out with some of these things that I'm doing. No, it didn't happen that way. Right at the very top of my page, we actually have a picture of what I've been showing you. And if you said, James, I want that week percent, I tell us what's the column heading, what is the purpose of it, and what's the script code for it. So what's the column heading? What is the purpose of it? What's the script code? What you would need is just to type in that script right there by going the same way we did before, by adding that script, okay? And you're going to see that trend daily, right? Trend daily. Help identifying current price trend relative to moving averages. Well, what's the script? It's right there. So here's the deal. I mean, you didn't have any struggle, okay? I mean, all you had to do is go to X page. How hard is that? Okay. So here's the deal. If you want it, go take it. Now, if you go to the, say, setup and then open shared item, I've had a lot of people tell me, like, why don't you sell that stuff? Well, I'm not going to. I mean, I'm a nice guy. Okay. Setup, open shared item. And this is where you would type that in. Okay. Right there. Now, we could go more into that, but I'll leave it right there. Now, the one I also want to go back to, and this one's been a little pain, okay? Dell has whipsawed around a couple times. Has anybody been watching Dell? Now, if we went back to Dell, we got to say that Dell has kind of had this up and down price movement. Now, remember one of the questions we had before regarding that the moving averages don't really matter as much if the price is consolidating. Now, we've done a bullish trade on it. We've done a bearish trade on it. And you're going to see that it's kind of gone up and down. Now, if you take a look at this, we have not broken out yet, but we've gapped up into the resistance. Now, here's the thing. Let's imagine the Bulls trade lost because it fell down. Let's imagine the Bears trade lost and it fell down. Really, the key to trading in general is how many times can you take a signal without getting personally biased and being willing to risk what you're willing to risk. That really tells me where you are in investing, okay? Sometimes, just like in basketball, Michael Jordan, he could take a shot, miss it. Take another shot, miss it. Doesn't mean he's horrible. No, it means he missed 2 shots. What does a great basketball player or baseball player do? They keep swinging. Now, here's the deal. We're going to actually go back into this because the past trades were the past trades. That has no bearing on the future trade. Yeah, but James, I remember it. The market doesn't remember it. The only person who remembers is you. Now, I'm going to right-click on this chart. We're going to go buy custom with OCO bracket. Now, one of the things we talked about in looking at trading momentum is the crossovers. Man, remember we said crossovers don't matter as much, or the moving averages if we have sideways trend. Noted. Now, what would actually start to matter more? If you start to break resistance. Now, let's go to that second chart in for just a moment. And are we starting to hit those highs? Well, remember, the orange line is a 2-week high or 10 trading days. Blue, 20 days. And you're going to see that gray line, 55 days, which is more intermediate. So short term, okay, think almost day trader, swing trader, the blue line, and you're going to see that gray line, intermediate. That's like 2.5 months, okay? Now, what I'm going to do on this is, the reason why I'm bringing this up is Dell, and the reason why we've talked about it is Dell actually has a pretty good channel. That channel is about $80 wide. This class is on momentum. So what we're looking for is what stocks might have big potential targets. Now, when you say targets, we're looking for maybe moves that might be double digit, 10, 15, 20, etc. If we go from support to resistance, that is a $79 price move or 20%. Now, if we take this and we actually say, well, maybe, we don't know the future, for crying out loud. I don't know what's going to happen this afternoon, okay? Now, here's the deal. If we actually went and looked up, let's say, where might it try to go to, okay? Try to go to? Maybe in the ballpark of 534. Now, I had a gentleman, very bright guy, said, James, it seems like if a lot of people are taught the same way, you could get traders or investors that are trading similar patterns. And I just looked at him. I was like, yeah, okay, absolutely. These are humans. These are computers. If the computers are actually set up to trade breakouts and so on, the computer could be trading the breakout. The person could be trading the breakout. That's the idea. Does it guarantee it's going to go up? No. If we actually went back and look at this, I'm going to put, let's say, 534 dated GTC, and the stop underneath, I'm going to put it right underneath today's low. Now, wait. If I put it underneath today's low, that is a pretty tight stop loss. Noted. And if we did that, 442.68 less 2%, 433.82. 433.82. Okay? Now, some of the things we talked about here today, let's recapture. We talked about these whole moving averages. That is a great way to gauge momentum. Second, another way to gauge that momentum is also looking at the second chart in, which is looking at the day's highs. Another way to kind of see that momentum and try to trade that momentum is the week percent, month percent, trend column, and also that column right there, these columns that are really showing you the day's highs, and also what are the color of the moving averages. These are all tools that can help you empower yourself to see those. Now, some people's, the biggest thing I want to kind of say here is, I don't want people to lean on me. I want people to lean on their tools and have an understanding of what the tools are showing them, where they have the confidence to trade those tools. And so, by trading those tools, we see over, based upon multiple trades, how those trades play out over time. So I want you to go out and put these charts on, put on some of these column headings on the Market Watch, and you yourself practice seeing and trading momentum. Momentum is interesting because momentum is the short-term potential burst in a trend, that green shading. Now, I'm out of my time here today. Cameron May will be coming up next with Getting Started with Options. I want to say thanks to Connie Hill for answering those questions in chat. Now, remember two things. If you went to this page, okay, on YouTube, youtube.com/@Trader Talks, if you have not subscribed, do so. It's free, okay? Second, you can also go to this page, which is going to show you my page right on X, and you're going to see right those charts at the very top of the scripts. And the last but not least, if you said, James, I'd like to learn more about the coaching at Schwab, which is free, a part of being a Schwab client, you could actually see live webcasts, in-person events, and also meeting the coaches as well. Now, remember with what we talked about here today, it was done for educational purposes only. All investing involves risk, and this has been the class on the Investor Master Series. Stay tuned for Cameron May coming up next. And thanks again, and go out and practice some of the tools we talked about here today. Take care. Bye-bye.